Hello and welcome to the week ahead video with me, David Madden. Now, before I discuss the major events of next week, let's just take a quick moment to recap the major events of the week just gone. On Wednesday, the minutes from the latest Federal Reserve meeting were posted, and although they came in as hawkish, they did come in notably less hawkish than traders had feared, and in turn we saw a large move to the upside in US equities and also European equities. We also saw a broad decline in the US dollar, and the weakness in the US dollar pushed up metals such as gold. Now, looking ahead to the week ahead, we have the all-important US non-farm payrolls report on Friday. That's going to be even more important in the context of the fact that the most recent minutes from the Federal Reserve's minute update came in less hawkish than expected. So people will be viewing the strength or the weakness, be it the case, of the US labour market and trying to figure out how is that going to influence future Fed policy. Now, on Wednesday just gone, the Federal Reserve indicated we could be seeing another 50 basis point hike in June and another 50 basis point hike in July. But beyond that, it seems to be a different story. Now, this is where the update from the Fed came in less hawkish than expected. So, with that in mind, people will be keeping an eye on the state of the US labour market. The most recent non-farm payrolls report, last month's numbers, was quite well received. The unemployment rate held steady at 3.6%, its lowest in 2 years. Although economists were expecting it to dip down to 3.5%. The headline non-farm payrolls number itself came in at 428,000, about 30,000, 20,000 ahead of expectations. So overall, it was quite a solid report, and not really much in there in terms of surprises. Looking at the US500 here, we can see that this day last week, the US500 fell to its lowest level in about 15 months. But all this week just gone here, it's been rallying. In fact, the highs we've seen in the last few hours have been high levels last seen over a week ago. Not quite 2-week highs, but highest levels in about 10 or 12 days. We're back above all three simple moving averages. We can see here on the MACD indicator that momentum is in positive territory. If we continue to hold above these three simple moving averages, it's likely that the more short-term upward trend will continue. A rally from here could see a target 41.58, and a break above that could see a target 42.26. Now, even though the more short-term trend for the US500 is higher, it's worth noting the much longer-term trend for the US500 is lower. Like I said, this day last week, the market was at its lowest level in 15 months. So if the US500 fails to retake this area here at 41.58, that could be an early indication that the broader bearish trend is still in effect. If you do see any losses on the US500 from here, we could potentially find support from this simple moving average here, which comes to play at 39.85, and a break below that could see a target this zone here at 38.73. Euro dollar has been in a sharp upward trend recently. This has been a combination of a broad rally in the euro, and also a combination of weakness in the US dollar. As I mentioned, the update on Wednesday from the Fed was less hawkish than expected. We continue to see weakness in the greenback, hence why we've registered a new 1-month high for euro dollar in the last few hours. Although the currency has pulled back slightly from its recent peak, it's still holding above these three simple moving averages, and while it continues to hold above these metrics, it's likely that this rally will continue. If we can continue to rise from here, we could target 1.0814, and a break above that could see a target 1.0935. As I mentioned, we have been retreating from the recent peak. We can see the RSI is moving lower as well, indicating the price bias is to the downside. If we do continue to move lower from here, we could find support from this area here in at 1.0641, and a break below that could see us retest this simple moving average here, which comes to play at 1.0608. So just to recap, next week on Friday we have the all-important US non-farm payrolls report. What we also have on Wednesday is an update from the Bank of Canada, and economists are predicting an increase of 50 basis points. So the Bank of Canada meeting is on Wednesday, and the US non-farm payrolls report is on Friday. That's all from me from this video. Thank you very much.
you.